Hello, everyone. It's so nice to have you today in this webinar, How to Win the SME Banking Battleground with Technology Partners. My name is Katalin Kauszli. I am a co-founder and business development director at Partner Hub Ltd. And I have Ambar Vitelli with me, who is responsible for strategic partnerships at NayaOne.
Hi, Katalin. Thank you so much for having me.
Yeah, hi, Ambar. First of all, just a couple of organizational things. We will have the webinar. If you have any questions, please type it into the chat box and we will answer the questions at the end of the webinar. Just a brief introduction from both of us. First of all, Partner Hub enables banks and financial service providers to orchestrate and participate in open finance and open data ecosystems by integrating financial services and invoicing. And how we do this, we have a white label SME invoicing technology, which can be embedded into online and mobile banking channels. And we think that there is a huge potential in SME banking today. That's why we are, among others, that's why we are doing this webinar today. We also have an invoice presentment layer, which can be used both for retail and SME customers. And we can integrate invoicing and request to pay for onboarding corporate customers into request to pay. And we are on the NayaOne platform, and we are very happy to have Ambar here today. Ambar, please explain to us, how does NayaOne bring bank fintechs together for innovation through its digital transformation platform?
Of course, thanks, Katalin. So NayaOne is the fastest way for banks and fintechs to connect and partner. We do this through our digital transformation platform, which is comprised of 3 different components. The first is the fintech marketplace that Katalin mentioned earlier. That is a marketplace of 300 technically integrated fintechs that are able to view with their use cases. The next part is the synthetic data marketplace. So this is a marketplace of 2.5 billion data points. It comprises of publicly available data, synthetic data, and proprietary data. The next part is the digital sandboxes that are secured with a layer of governance and controls. And what this platform actually enables people to do is to discover fintechs and to evaluate them and run POCs using our data. So a bank can evaluate a fintech without actually onboarding them. So you can reach a POC in 4 to 6 weeks.
Wow, that's wonderful. And please explain to us, how are banks and regulators worldwide using NayaOne platform to host hackathons and tech sprints? So how you can support banks and regulators with hackathons and tech sprints?
Of course. So our primary use case is supporting banks and regulators with innovation labs. The first part of that is high street banks in the UK that are using NayaOne to discover fintechs, build out customer journeys, build out product propositions, and scale them to production. The second part is a use case like the FCA's digital sandbox. So we power that for the UK regulator. Within that, they run cohorts, tech sprints, and it's a great opportunity to empower responsible innovation. We also power the UK's digital identity sandbox, which is used to generate policy surrounding digital identity, and that is in partnership with the Department of Science, Innovation and Technology.
Yeah, and what do you do in the US?
We've recently launched in the US with Valley Bank, who are based out of New Jersey, and we are powering their innovation hub which enables them to discover fintech solutions. So they might go in with a particular use case. They can find fintechs to solve that use case. They can experiment with them. Banks are able to compare one fintech against another, or are able to stitch together multiple fintechs to build out a customer journey and product proposition.
That all sounds very exciting, and later on, Ambar will explain to us how NayaOne supports SME banking use cases. But before we do that, I thought it would be useful to have a look at the SME banking market and the SME banking trends. What are the trends that are influencing both banks and SMEs in terms of SME banking? First of all, it's very important to say this. I think a lot of you might have heard a lot of times that SMEs traditionally have been underserved by banks. A couple of statistics on this: 47% of SMEs believe that their banks don't try to understand their challenges. We at Partner Hub did an analysis and found that only 14% of total SME funding needs are met globally. And with respect to the future, 70% of the economic outgrowth will be created by ecosystems in coming decades, and SME needs will be served by SME ecosystems, and banks will need to find their way in these ecosystems. So that's what we are going to talk about today. Why SMEs are so important? SMEs are the backbone of the economy. You can see on the figures, but in each country they may.
What do you think banks can do to sort of better support and better serve their SME customers?
Yeah, I think the key is to, first of all, there are a couple of things. So SMEs, first of all, need to understand, or banks need to understand the SME problems. And banks also need to understand from the short term to the long term profitability. So mindset change is needed from the banks, from the product perspective to the customer perspective. Because if we look at the SME priorities, banking as such is nowhere, but they have issues like growing the business, they need to manage talent, they need to manage their supply chain, and where banks can have also relevance. Managing the cash flow is a crucial thing for SMEs, and also taking care of administrative tasks. You can see also that time is of essence for SMEs because SMEs spend a lot of time and resources on non-core activities. So any value proposition that can help the SME to save time on the non-core activities such as banking, lending, financing, managing cash flow, administrative tasks, then this will bring them huge efficiency gains in the core business. SMEs are experiencing a tough time these days. First of all, the cost of living crisis on the revenue side, inflation hits SMEs on the cost side and also on the financing side. And on the investment side, a lot of SMEs face challenges with conversion to net zero. So these are the things that SMEs need help with, and also a focus on the industry specifics and the SME life cycle provides a better understanding about the needs of the SME customer. On the other hand, SMEs are willing to share more data about themselves. So if banks can use this data to provide a better service for SMEs, then those banks can really gain market share on the SME market. Another thing to consider is that because of the COVID, the digital transformation has also happened in the SME segment. So during the pandemic, SMEs both turned to digital business models. They are leveraging e-commerce and marketplace platforms. And at the same time, they are also expecting to be served digitally. So banks also need to take account to this, that the traditional SME banking model is not viable anymore. However, banks should also consider that the SMEs are diverse, so they should be able to serve all kinds of SMEs. However, as I mentioned, it's also good news because with the technology and digitization of the customer journeys, the SME segment becomes a viable segment to serve because the banks can cut their service costs on this. You can see a couple of statistics. I won't read them all, but the most important thing is that almost 70% of small SME customers think that digital capabilities from a service providers are key in serving SMEs. Another factor that banks also need to consider is that competition is increasing and digital banks have an edge. SMEs are loyal to their banks, but digital experience matters, and banks won't be able to keep their customers if they don't keep up with the pace of the digital changes. There are challengers, there are other types of market players that are tapping into the SME banking market. Again, just a couple of numbers. In the UK, less than 25% of UK SMEs switched their main bank in the past years. On the other hand, according to an Ernst & Young study, 32 billion US dollars of SME banking revenue could shift from traditional banking offerings to embedded finance experiences in the next 18 months. So that's shocking in the view of the total SME banking market, which is 1.2 billion approximately. So it's almost 3% of SME banking revenues could turn to other service providers. And one last thing to mention is that SMEs will be served not only by service, not by specific service providers, but SME needs will be fulfilled and served by emerging SME ecosystems, where all service providers will come together and fulfill SME needs and customer journeys in a joint offer. And SMEs will expect this fully integrated platform, not only for financial products, but all the services and all the needs that I mentioned before. And more than half of the SME segment said that they feel that such an approach would be better for them than the current approach. More importantly, 22% of SMEs think that such a platform could be provided by a bank. And most importantly, 17% of all SMEs would be willing to pay for such a platform. So this is, I think, a clear message from the SME segment. And what are the choices here for banks? Either banks start building their own platform, or they can choose and participate in such a platform, or alternatively, they can do both at the same time. But the most important thing is that the way SMEs are being served will drastically change in the future. And now I would like to ask Amber to explain to us what are the most relevant use cases that banks are currently exploring for POCs and POVs on the NayaOne platform, and how what is the process for you to support the bank in this journey?
Of course, thank you, Catalin. So I think just touching on Catalin's point of offering better digital experiences to SMEs, all of these use cases do fall under that umbrella. The first being customer acquisition. So under this, something like cash flow monitoring is a great example, and using live insights and live data will help reduce payment fraud and also minimize costs overall. We've got a lot of banks interested in supporting SMEs with opening multi-currency accounts, as a lot of them geographic expansion is a important part of their roadmap. Invoicing is, of course, involved here, and that's what Catalin will go into more detail about later on in this webinar. The next sort of broad area is SME onboarding, and this is largely centered around reducing onboarding time and reducing cost and being able to offer sort of streamlined account opening services, as well as enhanced due diligence, KYC, and AML. So overall, this helps not only improve compliance, but also helps improve the digital experience for the SMEs. Once again, on the digitizing and streamlining process side, we have the deposits use case. So this is leveraging open banking to enable central account hubs. This is leveraging banking as a service platforms to enable partners to open accounts. And the final use case we're seeing a lot of is SME lending. So this is leveraging alternative lending data to ensure SMEs have access to accessible, inclusive capital, and this process is a lot more efficient. So, using alternate data will help the credit decisioning process as it's not sort of relying on your typical profile. It's actually taking your customer and the fact they are an SME into account. So, with the data sources we've got here are e-commerce data and accountancy data.
So these were the main SME banking use cases that you support, and then I would get into the invoicing
Yes,
part, right?
just before you do, I realized I missed your question on how banks actually work with these fintechs. So, when a bank logs into our Discover platform, they're able to search by use case and search by tech provider. That's where, so for example, you can search SME lending, you have, say, 10 different tech providers that come up. You can click into them, you can understand the nuances, the niches, and how they differ. The next step to that would actually be going in and using their API key, which is authenticated through the NayaOne gateway, to actually bring them into a sandbox with relevant data and run that proof of concept. So it's a incredibly efficient process going from your typical 12 to 18 months without NayaOne just down to about 4 to 6 weeks.
Wow, that's a real, I mean, life-changing experience for banks' innovative departments, right?
Yep, that's right. And the security, infosec, and data teams are also much more comfortable because none of the data is customer data. It's all either synthetically generated by us for the use case or it's publicly available data. So that means there's no risk of data leakage when running a proof of concept with NayaOne. You also don't have to onboard the fintech into your four walls. You can run this test outside the bank, which is why it's a preferred option for many of the banks, especially across the UK and the US.
Yeah, I can confirm that onboarding a fintech into a bank who doesn't have such a sandbox can be kind of a lengthy process. So
Definitely, because the onboarding process hasn't
yeah,
changed all that much since onboarding your Oracles, your SAPs, and your IBMs.
yeah.
data will help reduce payment fraud and also minimize costs overall. We've got a lot of banks interested in supporting SMEs with opening multi-currency accounts, as a lot of them geographic expansion is an important part of their roadmap. Invoicing is, of course, involved here, and that's what Catalin will go into more detail about later on in this webinar. The next sort of broad area is SME onboarding, and this is largely centered around reducing onboarding time and reducing cost and being able to offer sort of streamlined account opening services, as well as enhanced due diligence, KYC, and AML. So overall, this helps not only improve compliance, but also helps improve the digital experience for the SMEs. Once again, on the digitizing and streamlining process side, we have the deposits use case. So this is leveraging open banking to enable central account hubs. This is leveraging banking as a service platforms to enable partners to open accounts. And the final use case we're seeing a lot of is SME lending. So this is leveraging alternative lending data to ensure SMEs have access to accessible, inclusive capital, and this process is a lot more efficient. So using alternate data will help the credit decisioning process, as it's not sort of relying on your typical profile. It's actually taking your customer and the fact they are an SME into account. So with the data sources we've got here are e-commerce data and accountancy data.
So these were the main SME banking use cases that you support, and then I would get into the invoicing part,
Yes,
right?
just before you do, I realized I missed your question on how banks actually work with these fintechs. So when a bank logs into our Discover platform, they're able to search by use case and search by tech provider. That's where, so for example, you can search SME lending. You have, say, 10 different tech providers that come up. You can click into them. You can understand the nuances, the niches, and how they differ. The next step to that would actually be going in and using their API key, which is authenticated through the NayaOne gateway, to actually bring them into a sandbox with relevant data and run that proof of concept. So it's a incredibly efficient process, going from your typical 12 to 18 months without NayaOne, just down to about 4 to 6 weeks.
Wow, that's a real, life-changing experience for banks' innovative departments, right?
Yep, that's right. And the security, infosec, and data teams are also much more comfortable because none of the data is customer data. It's all either synthetically generated by us for the use case or it's publicly available data. So that means there's no risk of data leakage when running a proof of concept with NayaOne. You also don't have to onboard the fintech into your four walls. You can run this test outside the bank, which is why it's a preferred option for many of the banks, especially across the UK and the US.
Yeah, I can confirm that onboarding a fintech into a bank who doesn't have such a sandbox can be kind of a lengthy process. So
Definitely, because the onboarding process hasn't
yeah.
changed all that much since onboarding your Oracles, your SAPs, and your IBMs.
Yeah. Yes, so getting into the invoicing space, we, as the provider of this invoicing technology for banks, we think that it makes perfect sense to integrate core banking services and digital invoice management services into banking, because this is a kind of a natural connection between the two areas and activities, as payments and financing and digital invoice management are both part of the purchase to pay process. So if a bank launches such an integrated solution, then it can serve more effectively its SME customer needs, and it is also good place to start building an ecosystem and becoming a financial one-stop shop. So we think that for any bank who really wants to serve their SME customer base better, invoicing is the next next best offer after the core banking services as a value-added service, because each SME needs to do the invoicing task and needs to manage its cash flow, both containing the invoices and the payment and financing activities. The other reason that we think it is a good offer, that it saves, so digital invoice management and digital banking together saves time for the SME customer. I can tell it from my own experience that even for a small SME like a Partner Hub, at least half a day, 1 day per month can be saved such a solution, and which means time saving on the SME side. It is the same for the banks, because if the bank has the digital invoice data, then it can also digitalize its processes for payments and also invoice financing, meaning only factoring or through the whole supply chain for supply chain and trade finance activities. And invoice data also provides additional and richer data to personalize the SME banking experience. So overall, we think that after the digital onboarding and after the core banking products that Ambar just mentioned, digital invoice management would or should be definitely considered by banks as a value-added service.
Yes, so using NayaOne, a bank can come in and can actually call in Partner Hub's API with the relevant data and run a proof of concept in a matter of weeks. This can be taken one step further, where the bank has their own existing core banking platform and their own existing tech stubs. So what's used there is stubs of the core banking environment and any other applications that the Partner Hub APIs need to integrate with can be brought into the sandbox to create the bank's mock environment. Then you can not only run a POC on Partner Hub's solution, but you can actually see how Partner Hub's solution integrates within your four walls, which de-risks your integration and also will bring up any integration challenges you may run into post POC. So it goes one step further than actually just testing, does Partner Hub work and do you like them more than any other solution? You can actually see, what does Partner Hub look like within your bank? So it makes it a lot easier when you actually decide to partner with Partner Hub and take it to that live sort of production environment. Damarak, I hope that answers your question.
Yeah, I can see another question from Amrit. Yes, so we can obviously serve non-bank financial service providers. There, I think if we are thinking about specialized payment service providers, then we can be there with the invoice data, and then payments can be initiated or request to pay messages can be initiated from the invoice data. If you are talking about specialized lending institutions, then also we can have the invoice data ready and be used by the lenders to initiate the lending process. And when the bank doesn't have its own invoicing solution, we can integrate very effectively with either third-party invoicing solutions or just grab the already existing electronic invoice data or digital invoice data. So these are the ways that Partner Hub can provide support to specialized financial services providers. Obviously, if you are interested in these topics more in detail, we are happy to explain more in detail on one-on-one sessions.
Definitely. Also happy for any banks that are listening who are interested in SME use cases to drop me an email so we can provision you some access to our marketplace that you can go on and explore Partner Hub and other solutions.